All right, welcome to Talk on Investing. I am Tom, and as always, this is not financial advice. Today, I want to do an update on the overall market and then go through a few specific stocks. Today was a down day, and I want to talk about the big event that's happening later this week that really, I think, is going to dictate where the next few months go with the stock market, at least the next 1 month. And of course, I'm talking about the CPI data that comes out this Thursday. So if you're new to the channel, please remember to subscribe to the channel and hit the notification bell. Also, if everybody could please smash the like button. And if you want to support the channel, you can actually join the channel and become a member by hitting the join button. If you're on an Apple device, you can actually just hit the link below if you don't see the join button. So members get some special additional content as well as a members only live stream every Tuesday. So let's talk about the stock market. The market is now closed for the day. It was red across the board. So I just want to take a look at what happened. Most importantly, I want to talk about the NASDAQ and what happened to that today. But let's go through everything for starters. The S&P 500 was down 0.75%. The Dow was down 0.32%, so that was not a big move on the Dow. The NASDAQ was down 1.04%. So that was a decent move to the downside. The Russell 2000 was down 0.6%. So we were red across the board. We're going to look at a few other indicators as well to kind of tell us what's going on and where we're going. But I want to talk about the NASDAQ because today the NASDAQ took out its previous lows. So that is a significant event. Okay, so just a little general market overview before I get into some of my watch lists. If you look at Yahoo lists the most active stocks of the day. So Ford, stock ticker F, Ford was down 6.89, almost 7% on the day. That was a very big move to the downside. And General Motors also had a similar day. So those were big moves to the downside for the automobile makers. Also, just to follow up on a video I did last week, Carnival Cruise CCL, that was down 5.6%. So that continues to hit new 30-year lows. And lastly, Nvidia was down over 3%. All the chip makers were down again today. They're all at or near their 52-week lows. One of these stocks is on my list. I want to look at the stock losers. So essentially, these are the stocks that did the worst in the market today. And you're going to see the fourth one down is DKNG. That's DraftKings. That's a stock we have followed on the channel. So DraftKings was down almost 14%. That is still not even approaching its 52-week low, but it has been in a downward spiral for the last several weeks. Okay, now I just want to take a look at the indexes and see what's happening here because you can see we're starting to form new lows. All of the indexes hit a low sometime in the middle of June over the summer. Subsequent to that, several of them have taken out that low. So I want to start on the SPY, which is the S&P 500. So this is the broadest index of the market. And you can see we have a red line from back in June. This was June 17th, where the SPY got down to about $362. Well, we took that out and set a new low a couple of weeks ago on September 29th, when the SPY got down to about $357. Today, we retested that low. The SPY closed at around $360, but it did get down to a low of $357.67. That was within a few pennies of the low that it hit about 10 days ago. So this is testing a new all-time low. This is now a 16% pullback just from our highs back in August. We're looking to set lower lows here. Let's go to the NASDAQ. Okay, so this is the QQQ. This is set to mirror the activity on the NASDAQ. So you can see today, this is on the 1 day time frame. You'll see this is today's candle. This red candle did set a new 52-week low for the Qs. So that's an important thing. We've taken out our lows. We originally set a low back on the 16th of June, so just 1 day before we did on the SPY, and that was at about 269. On Friday, September 30th, we actually took out that low, and now today we have set even a new low. So while we closed at about 266, we did get down to 263.64 on the Qs. So this is starting to be in uncharted territory. This is lower lows. And my point of these, and I'll look at the Dow in a minute, is that we just finished the trading day on Monday. We have Tuesday and Wednesday left. And then if you look at this schedule, you'll see September CPI data comes out October 13th at 8:30 in the morning. So that is before trading on Thursday. So the CPI data has been really the number one thing in concert with the Fed meetings, but the Fed meetings are largely a function of what happens with the CPI data. So Thursday morning, we are going to find out what direction we're headed in, at least for the next month, in my opinion. I think really everything, as we're sitting here lingering, hanging around our lows or hitting new lower lows, this number is going to mean everything. So we either have a chance to have a little bit of a nice relief rally going into the holiday seasons, which oftentimes happens. However, if this is a disappointment, if this is another miss, I do think we take another leg down in the stock market. So this really is a pivotal point in time. So we have 2 more trading days, Tuesday and Wednesday, before this data comes out prior to the US markets opening on Thursday. So just to take a look over the last 3 months, in June the CPI was 9.1%, in July it was 8.5%, in August it was 8.3%. Although that seems like it's trending in the right direction, that 8.3 was really not a great number. It missed expectations. And additionally, really the only thing that went down was the price of fuel, and everything else on the list on a line item basis either stayed the same or went up. So that is not what the market was expecting at all. So what we really need to see, the consensus for this next reading that's going to come in on Thursday is 8.1%. We need to see some progress on some specific line items in goods and services that are starting to trend in the right direction. The market is not going to move just because this number moved down on fuel alone while everything else is rising. So we need to see across the board improvement. And if we can just meet this expectation, I think that is the critical thing. The consensus is 8.1. We need to do 8.1 or better. And we stand a good chance at this relief rally that I've been waiting for, and it just has not come yet. And really, I've been waiting for this since the last CPI data. So we're now a month later at the next CPI data. We've gone sideways and a little bit downward. We've set some lower lows on the indexes, and that was a result really of the disappointment of the August number. So this September number is going to reign supreme. This is going to dictate where the market goes really until the Fed meeting on November 2nd. Okay, a couple other important things to look at. This is the DXY, so this is the strength of the dollar versus other foreign currencies. We've been trading inside of a range. These yellow lines go all the way back to January of 2022. So this is all of 2022, and you can see this has just been trending straight upward. We've really been bouncing off the top and the bottom of these lines of support and resistance. The last 2 times, we've really never got down and tested this line of support. We got somewhere in the middle and turned back around, this time all the way up to our line of resistance. So we did get as high as 114.78 on this, so very close to 115. There's a blue line up here at 121. You have to go back 20 plus years, and we did have a run up to that line 20-something years ago. This green line actually goes back 20 years as well. So we took that out several months ago, and since we took it out, it's now become a line of support, and we've been above that ever since. So just so everybody understands, and you can see we've got a bunch of green days in a row on the DXY. This is an ever-strengthening US dollar, which is not good for the US stock market. So that is one of the reasons we're hitting lower lows on the markets. It's not good for the equities. It's not good for cryptocurrencies. Generally across the board, when the dollar gets too strong, that hurts the other investments. So this is something to keep a close eye on. I just want to show you a few things that I'm looking at that we need to keep a close eye on, because these things will also dictate what is going on. So the last thing is the VIX. This is the volatility index. So I've drawn a line here at 35, a blue line you'll see at 35. We have touched this several times. This is the VIX on the 1-day time frame. So every time we hit a local high on this and approach or break 35, the market tends to hit a new low. So we're teetering very close to this point of 35 again, so we'll see what happens to the VIX. I suspect this will all really come down to Thursday's CPI data. The VIX is capable of getting much higher than this. So just to put it in perspective, when we had our global situation that really kind of shut the world down, which was March of 2020, the VIX got up to 86. So that is astronomically high, but you saw what happened to the market when the VIX gets to those types of levels. So I'm not expecting anything like that, but anywhere from 35 to 40, and we can expect to hit maybe a series of new lows. Okay, so those are the things I'm going to be paying very close attention to over the next 48 hours. And then obviously Thursday morning at 8:30, we're going to get the big number, and that's really going to tell where we're going. Okay, that's my quick update on where the market is at, and obviously the big event that's looming over us in just a few days. So thanks so much for watching. Remember to subscribe to the channel and smash the like button. We'll see you in the next video. Thanks.